What's going on, everybody? It's Stas here. So not a bad day in the stock market today, guys. S&P 500 up 12 points, up 0.3%. The Dow Jones, on the other hand, went down a little bit, down 0.1%. But don't worry, guys. The NASDAQ 100 went up 30 points, up 0.25%. And the Russell 2000 led the way, up 0.6%, up about 10 points on the day. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over a bunch of stocks here that I'm looking to buy as we're getting into November here of 2020. And I also want to do an update on stimulus. I want to break down one earnings report and what I've been doing here in the stock market, what I'm personally holding right now. So if you guys find value in the video, hit the like button, subscribe to the channel, check out the Strive Smart Discord chat and Facebook group, link down below. And by the way, guys, those are free of charge to join. And you can also get 3 free stocks from WeBull, each valued up to $1,600. Also linked down below. All you have to do is deposit $100 and you get 3 free stocks. And I also get 3 free stocks since it is an affiliate link. So let's get into it, guys. Today was a pretty solid day, I'd say. And we are slowly starting to pick direction on the S&P and across some of these indexes, right? Not all, we'll break it down, but some of them. And S&P is one of them, right? It's picking a direction here to the upside, right? The bulls won the day, and you guys can clearly see it here on the hourly chart. Yesterday, we had a strong day by the bulls as well. We ended up holding 34.30, which has been a support here on the S&P for the past couple of trading days, right? So that's a good sign. But we talked about in yesterday's video how we were still trading under the 50 SMA here on the hourly chart. We were also still in this wedge here on the hourly chart, which was a bit worrisome to me, right? Because at that point yesterday, we could have easily dropped down, right? We could have easily got trapped at 34.50 and the markets could have went lower, right? So today came around, right? Today came around and mind you, yesterday we closed a little bit above 34.50, which was a good sign. And today came around, we gapped out of that 50 SMA here on the hourly chart, right? This green line, which is bullish. We ended up pulling down and we tested right around 34.40, 34.45 at a higher low, and we ended up ripping into the close, making this V-shaped pattern pretty much today. Today, all it was a V-shaped pattern. Take a look here on the intraday chart here, the 1 day, 1 minute S&P from 34.60, double bottomed at 34.40, and it ended up rallying, closing right at 34.65. So for me, guys, this is looking very bullish, right? Take a look here on the 5 day, 5 minute. We were downtrending for a couple days, but now we found a nice base at 34.30. 2 straight days of higher highs, higher lows. This is looking strong, but there's still a big resistance coming up. 34.80 is a big resistance here on the S&P 500, which I'm quite scared of. I don't want to dive deep into stocks quite yet until we get out of this resistance. So I kind of want to wait and see what happens next week at 34.80. But all we need to know now is the bulls are getting there, right? They're making the strides to get there with today's close, and it's looking pretty solid for the bulls, right? So 50 SMA broke on the hourly. Take a look at 34.80 this upcoming week. If we break out of there and we get stimulus talks, or the stimulus package rather, that is going to be great. But if we get prolonged negotiations, which have been going on for a while, if they continue going and we get closer and closer to the election without a stimulus, I think there could be more downside, quite honestly. So it's really the flip of a coin at this point, guys. It's very difficult to determine where we're going to go, but the technicals don't lie, and the bulls are slowly gaining an edge here. So in terms of stimulus, House Speaker Nancy Pelosi said today, it was still possible to get another round of CV aid before the November 3rd election, but that it was up to the president to act, including bringing along reluctant Senate Republicans. Trump and Treasury Secretary Steven Mnuchin countered that Pelosi must compromise to get an aid package, saying significant differences remain between the Republican administration and the Democrats. And I think Trump said this, quote, "Now we're talking, and we'll see what happens. But at this moment, I would say that I actually think Nancy would rather wait until after the election." That's what Trump ended up saying. He told reporters that in an Oval Office appearance together with Mnuchin. And Mnuchin also said if she wants to compromise, there will be a deal. So what that's telling me is they're still going back and forth, guys. They have not come to anything quite yet. And they're using these negotiation tactics against each other, right? With Pelosi and the deadline. Now we're seeing Trump was doing negotiation tactics before that. I mean, it's I don't know if it's going to end. This weekend, will we get a package? If so, the markets will explode. If not, we could end up seeing a bit of a sell-off on Monday. Will we get it next week? Nobody knows at this point. But again, bulls are gaining an edge as of today, Friday. What's the date? The 23rd of October. So let me know your thoughts down below, guys. Dow Jones, very similar to the S&P, but like I said before, not every index broke out, right? The Dow is still in this wedge here, still trading under the 50 SMA on the hourly chart and under the big resistance at 28,400. So watch 28,400. If we break that, the 50 SMA on the hourly chart as well, we might see a short-term gap up to 28,700. Let's say we fail at 28,400, which is possible based on the technicals now, and we break 28,200 on the downside. That is where we might see the Dow Jones see a pretty big gap down, maybe to $28,000 flat, right? 28,000 points flat. And when it comes down to the NASDAQ 100, very similar. We aren't quite yet breaking out. We're still under the main moving average here, the 50 SMA on the hourly chart, and we're trading under 11,700, which is a big level of resistance. Although, yeah, we are double bottoming and breaking out. The past 2 days, that is a good sign, but we haven't fully seen that full out breakout confirmation, which, hey, we might get stimulus next week over the weekend, and if we do, that is where we might see that full on breakout, guys. So let me know down below in the comments, what are your thoughts? And like I've said before, the Russell 2000 is relying on the stimulus. That's the heart and soul, I guess you can say. The small businesses make up the heart and soul of the American economy, right? So the Russell is doing well here as stimulus is in the works, and that's just how it goes, because the stimulus is going to help obviously a lot of people out there, but especially some smaller businesses, right? So that's kind of what we're seeing right now. So let me know down below in the comments, what are your thoughts, as always, on the stock market, what you guys are doing, where we're heading next week, stimulus. I would love to know. Drop a comment down below. So in terms of my trading here, guys, I was this close to buying DraftKings and adding more to my Apple position today at 115, but I didn't. And the truth is, guys, this week has been very slow for me in terms of trading. I really haven't made too many moves, but I'm still holding on to my positions, right? Apple, I'm in at 115, and I shared this on my Twitter. Make sure to go follow me on Twitter at StasSurfS and on Instagram at StasSurfS, all one word put together. Again, at StasSurfS. Go follow me there. And I posted this 4-hour chart of Apple, right? And mind you, Apple is reporting earnings on Thursday next week. Apple is in this longer-term wedge. We're seeing a bit of a break here on the bearish side, right? The bears are taking over. It seems like we're breaking the support here on Apple at this, 114, 113, 115 points. So that's a bit worrisome, although we haven't broken down and gapped down quite yet. This pattern right here is definitely worth watching for this upcoming week. And the fact that, or rather the reason why I didn't add into Apple today is because we didn't really get any form of confirmation, right? Whether we're breaking out or whether we're going lower. So I'm just going to give it some more time, the wiggle room here. Maybe I add more next week. Honestly, if it goes down to 110, that's probably where I would add more and average down for my 115 cost basis. And I'm still in workhorse, guys, WKHS. This one's finding some nice support at about $20. I'm really liking the price action here right around 19.20. We're finding support, although we haven't fully broken out quite yet. So I'd watch for $21, $22 on the upside next week. That's going to be a big resistance and a potential gap to fill in these next couple of trading days. And I'm also in EA still, Electronic Arts, in at about $133. I might average down on this one if we get a confirmation of a pop here above 127, maybe at around 130. I might average a little bit more into that one. And I said I almost got into DKNG, guys, today, but I did not pull the trigger. The lockup ended up ending on the 20th, so now a lot of the insiders, they have the opportunity to sell out. So I might give it a little bit more time before taking a position, but again, I almost did it, guys. I almost got a bit antsy today to take a position, and that's sometimes what happens when you're not making moves in the market one week, and you kind of feel like you have to do something, but the truth is, you don't always have to make moves. It's okay to sit on cash for a couple days or sit on positions you already have. You don't always have to be making moves. The way I look at it is, sometimes, well, a lot of the time, most of the time, it's quality over quantity, right? Focus on the quality trades, the quality plays, opposed to making a bunch of moves, right? And that's kind of what I've figured out over the years and what works for me. So overall, guys, I'm in workhorse, EA, Apple, almost took DKNG, but I didn't, and that's what I'm doing. So let me know down below in the comments, what are your guys' thoughts as always. Now let's talk about earnings reports. Well, report, because there's only one we're going to talk about, and it's AXP, also known as American Express. So American Express, guys, is one of those stocks that is still down a big chunk from 140 pre-crisis. It went down to $67. Now we've recovered to about $100. So we're still down a good chunk, about $40 per share. And let me draw out these trend lines. I mean, you guys can see, technically speaking here, AXP is seeing big resistance at 108. You guys can clearly see that there. We got rejected there literally yesterday. Now we sold off to about $100, and it looks like we're holding the higher low. So that opened up about a 7-8%, or rather $7-8 profit window for AXP on earnings that were not that bad, but they weren't that great either. EPS came in at $1.30 versus $1.33 estimated, so they missed on EPS. And a year ago, to give you guys an idea, EPS was $2.08. So they're doing pretty poorly compared to last year on the EPS side of things. And revenue came in at $8.75 billion versus $8.66 billion. So they beat there on revenue, and revenue last year was just a hair shy of $11 billion in the same quarter last year. So they're not doing as bad in terms of revenue compared to last year as they are in EPS, but still, it's shedding numbers from last year, as many businesses out there are. So I'm watching AXP here. If it holds the uptrend, the high or low, we might see a rally of some sort to the mid-hundreds, maybe 108. So we'll see there. If that happens, I might take advantage of that. So what do you guys think? We have a bunch of airlines reporting. They already reported. We have a lot of tech names next week. Let me double check. I know Apple's on Thursday. I think Amazon's next week as well. Let me double check here with you guys. Amazon's on the 29th, so yep, that's next week. When's Microsoft? Microsoft is on the 27th, so get ready, guys. Next week is a big week. Big tech is reporting. So if we get big tech doing well in earnings and a stimulus package, that could equal an explosion here in the market. And we have Facebook on the 29th. And let's take a look here. When's Google? Is Google next week too? Google's next week too. So we have pretty much every big tech name reporting next week. So get ready and subscribe to the channel if you haven't yet already, because we're going to be covering all of that here as we do every single day on the channel. So let's talk about some other stocks here. Shopify, ticker symbol SHOP. This one is trading horizontally still. Let me clean up this chart a little bit to show you guys what I'm looking at. Actually, no, we'll just add one trend line right here. We got rejected clearly at about 1130 to about 1150, which has been a resistance here over the past couple of months on Shopify. We pulled down. We tried to hold an old resistance as a new support at about 1,050. We failed doing that. We actually broke that support this week, and now we're trading right around 1025, 1030, which could be a higher low. This could be, based on this chart, a dip buy potentially, but I want to wait and see Shopify turn to the upside, rip upwards above 1050. I think above 1040, actually, yeah, more like 1040. That could be a breakout spot on Shopify next week. So I'm going to put that on here. Is at or above 1040. So if we get that alert and we break that resistance point, I could see Shopify going in the short term, maybe back up to 1100, right? That's very possible in my eyes. So I'm watching this one after it's been beaten down for the past couple of trading days. It's due for a comeback in my opinion. And are they reporting earnings next week as well? Don't tell me, guys. Don't tell me this now. That's going to be nuts. Yes, they're reporting earnings next week on Thursday. So next week, guys, just get ready, man. It's going to be unbelievable. So Shopify, AMD, I'm also watching this one. Advanced Micro Devices did well today, up 3%. And are they also reporting earnings? They are also reporting earnings next week, guys. Up 3% today, up $2.50. And this one's not really running on any catalyst from AMD, but they're running because Intel ended up dropping yesterday about 10%. So Intel, AMD, they're big competitors. So when one does poorly, right, the other does well. And obviously Intel is the laggard these past couple of months, and AMD has just been crushing it. So AMD, if you guys saw, it's down a good chunk from its highs here. A couple weeks ago, literally like 2 weeks ago, it was at about $87. That was the resistance. And before that, back in the beginning of September, it was at about $94. So this could end up being a higher low potentially here on AMD, and I'm looking at it anywhere above $83, guys, so I'm not pulling the trigger quite yet because 83 is a big resistance. You guys can see it here on the 4-hour. It was a resistance back on the 9th and 10th of September, and it's also right around where that 50 SMA lies, so I'd want to see a pop out of there first because I don't want to get caught here. This could potentially be a bull trap, so I'm going to set an alert on AMD at $83. If it breaks there, I'm probably going to go all in on this one, guys. Advanced Micro Devices. And we also have J&J here, which is popping up after hours today on Friday, or at least it did. I think it's selling off now, but yeah, it is selling off now. But they're looking to resume the U.S. part of the CV vaccine clinical trial, which is great news, in my opinion, for Johnson & Johnson. And obviously the stock's running a little bit on this news today. And if we pull up on this, let's say 4-hour chart, we zoom in a little bit. We don't even have to zoom in. We're at a support on Johnson & Johnson right around 143 to about 145. Now we're ripping up again, like I said, after hours with a big resistance coming up at 148. So this one, guys, could also be a bull trap if we don't break 148. As you guys can see, we're still trending under main moving averages and 148 on the 4-hour chart. So I'd wait until 147, 148 breaks, but hey, if you're willing to buy before confirmation, even 145, I think there is a pretty decent risk-reward ratio here, as there is upside to about 150 to 155 on Johnson & Johnson. And this is one that I don't like calling stocks easy money or whatever, or swing trades easy money, because there's no easy money out there, guys. There's risk with everything. But with this and the way the patterns moved in the past couple of months, I could easily see it go back up to the 150s. I might even buy call options maybe on Johnson & Johnson, maybe a month or two out with a 150 strike. Who knows? We'll see. We'll see what what the options chain's looking like. But J&J, I like it here. Disney is another one that I might consider buying some calls on longer term. You guys can see Disney is still holding the uptrend, which is nice. It's been fiddling with this the past couple of trading days. Now we're also in some sort of wedge here, so I like to see a breakout into the 130s before I even consider a position here. And if you guys didn't know, Disney is looking to double down on streaming right now, which I am absolutely a big fan of, right? Did they cut the dividend? I'm pretty sure they're looking to just cut the dividend completely and just go all in on streaming, which is great because at the end of the day, I rather them take that money instead of paying it to me as a shareholder, whatever the dividend was, 1% or whatever, very small dividend, right? I rather them just keep that. I don't want the money. You keep it, right, Disney, and reinvest in the business. So that's what they're looking to do, and I'm excited about that. And Disney, I would put a target on it. I'd say high 130s, maybe $10 higher from where we are now. 137, 138 is kind of my price target here in the short term. And again, guys, do your own due diligence, do your own research. Don't buy anything based on my opinion because it's my opinion. It's my opinion, guys, right? So JetBlue, JBLU, this is one that I'm also watching. They're reporting earnings in the next couple of days. I have to double check here. JBLU is the ticker symbol. They're reporting on the 27th, right? And today they were up 3%. Yesterday, the stock was up like 8-9%. So this one's clearly gaining some upwards momentum. We hit a higher high here. We have a pretty big resistance coming up. Actually, no, we already broke the resistance at $13, which is great. That's showing just how strong the momentum is. So in the short term, especially with good earnings, we'll see in some guidance, maybe we make it up to 15. That's a bit of a stretch, I know, but it's possible. And I'd probably look for maybe a pull down and some sort of consolidation at $13 and after earnings because I don't like really holding through earnings. Although one stock I will probably hold through earnings, guys, is Apple. I'll be honest. That's one that I'm probably going to hold. I probably am going to hold that through earnings. But 99% of the time, I don't like holding stocks through earnings, and especially ones like airlines, which are under a lot of pressure. But we'll see, right? If 13 holds, maybe a move up to 15 is possible. And I'm also watching Slack here, WORK. They actually got a downgrade a couple days ago. Morgan Stanley here. Slack's growing work from home competition triggers Morgan Stanley downgrade. So they got a downgrade. It gapped down on that day from about $31 down to about $28. Not the prettiest move, let's be honest, but the past 3 trading days we are seeing strong support at $28.70. And us traders, right? A downgrade is not good, but that's not really a concern if you're a trader, because if you're a trader, you're trading price action. But if you're an investor and a company, a firm downgrades your company, that's a bit more of a worrisome concern, right? Because you're in it for the long term. But if you're looking to get in and out on some quick price action, whatever, you don't really care about downgrades. And a lot of the time, if a company gets downgraded, the stock reacts for a couple days and then all of a sudden it forgets about it and it rips higher. So, we could see that with Slack easily. So I'm looking at $29 to hold here. It already is. And you guys can clearly see, we've held $28, $29 before and we've rallied up to $30, the mid 30s, lower 30s. So there's potential, right? I'm watching from about $28 to $30. And there goes my dog. She's going to start barking. But the last one here that I want to talk about is IPOB, which is down about $8 off of the highs here, which equates to about a 30% drop. So I'm looking at this one right around that 180 SMA, right around $18, $19 per share on the 4-hour chart. That could be a dip buy, guys. So IPOB open door. I'm very excited about this. I've said this before. Be patient with this one. It was overbought at 27. Now we're getting to oversold territory. And this is another one that I almost pulled the trigger on today, but I'm being patient, guys. So overall, that's it for the video. If you all enjoyed it, hit the like button for me. Make sure to subscribe to the channel. And if you guys are not sick of me yet and you want to listen to some other content, I actually uploaded a video earlier going over a bunch of recovery stocks that I'm watching and looking to buy now. So I'll link that down below. I'll also put it here in a card, so go check that out after this. And also claim your 3 free stocks while you're at it. They're each valued up to $1,600. All you have to do is deposit $100 into the account, and that is when you get your 3 free stocks. So I'll catch you all in the next video, which is going to be that recovery stock video. So click that. I'll see you there. Have a great weekend. Peace out. And yeah, thanks for watching, guys, as always.